So it says, Mwanzo Limited and Upya Limited operates in the clothing industry. The following information relates to the financial position of the three companies as at 30th September 2017. So we have Mwanzo Limited, Safari Limited, and Upya Limited. So we have three of them. So this is their balance sheet. Additional information. Mwanzo Limited acquired its investments as shown below. So company which was acquired by Mwanzo acquired Safari Limited and also acquired Upya Limited. Number of shares acquired, they acquired 80,000 shares in Safari. They acquired 20,000 in Upya. Cost of investment. So cost of investment is the purchase consideration. So that is 5,000. That is 1,600, of course, in million thousands there. Retained earnings, as you can see. Date of acquisition. Safari was acquired on 1st October 2015. Upya was acquired on 1st October 2016. At the date of its acquisition, the fair value of Safari Limited net assets were equal to their book value, with the exemption of land that had a fair value, that is 400, or 400,000 in excess of its book value. That is what? Revaluation, which again we are giving a good name. We call it fair value what? Uplift. Yes, fair value uplift. Elizabeth, let me check. Oh, sorry. I don't know what they switch. Tell them to use. So, okay, some people are using the old link. Ama tuwachane na wao, ndio. So link nimetuma hapo sasa hivi. There? So let's proceed. So that is what we call revaluation, which is the fair value what? Uplift, the 400. On 1st September 2017, Mwanzo Limited processed an invoice for shillings 100,000 in respect of an agreed allocation of management fees to Safari Limited. Okay. As of 30th September 2017, Safari Limited has not accounted for this transaction. Who processed the invoice? Mwanzo. And Mwanzo is the parent. So they allocated some management expenses to be paid by the subsidiary. Prior to this, the current accounts between the two companies have been agreed at Safari Limited owing 142 Mwanzo. Prior means before. So before that invoice, Safari was owing Mwanzo how much? 140, which was included in trade receivable and trade payables. So that is intergroup debt, which affects both. Sure. During the year, Upya Limited sold goods to Mwanzo at a selling price of how much? 280, which gave Upya a profit of 40% on costs. Mwanzo Limited had a half of these goods in inventory. That is element of what? Element of UPI, the unrealized profit on inventory. The fair value of the non-controlling interest, NCI, in Safari Limited was 1.5, full goodwill method. Required group statement of financial position as at 30th September 2017. So they want only consolidated balance sheet. So one, the main reason why I selected that question, I don't know whether you have noticed there is nowhere we have been given percentage acquired. Have you noticed? Have you noticed there are a lot of concern? Eh? You noticed though. So we were not given the percentage of acquisition, and that is very possible. They can give you a question, but they don't tell you how much or what percentage was acquired in that company. So you cannot just guess that I think it is normally 80. Eh? So you cannot guess. So where you have not been given the percentage of acquisition, you use the number of shares acquired as a fraction of the total shares in that company. I hope you are understanding that. So let's get percentage of acquisition. Percentage of acquisition. Percentage of acquisition. Percentage of acquisition. So percentage of acquisition, check additional information number 1. Additional information number 1. How many shares did parent acquire in Safari? 80,000. Eh? So you take 80,000, divide by the total number of shares in Safari. Total shares, check equity. But remember, equity balance sheet is in shillings. So you will take the shares there, you divide by the par value to get the number of shares. Let that be clear to all of us. Yes? Safari. Are you seeing the 2,000? Yes. But you see balance sheet is in shillings. Eh? So to get the number of shares, take 2,000, divide by the value of each share, which is 20. All shares are shillings 20. Or where are you checking? No. You see Safari. You're not understanding what I'm saying. You are reading, I think you are reading something different. Are you seeing the total value of shares in Safari? How much? No, the total value of the shares, 2,000. So to get the number of shares, because here they are talking of the number of shares. So to get number of shares, we divide by 20. So take 2,000, divide by 20. Apparently, we were working in thousands, so 80 should just be. Sure. You know we are working in thousands. So 80, we're supposed to reduce these zeros. So it should just be 80. Then you multiply by 100. Tell me the percentage. 80%. So 80%. 80%. 80% makes Safari to be what in the group? Safari qualifies to be subsidiary. Subsidiary starts at what percentage? 51. Can you do the same and tell me the percentage we are owning in UPIA? Tell me the percentage we are owning in UPIA. 20%. You have calculated? 20%. Use the same criteria and tell me the percentage kindly. 40. Okay, let me see from others. Okay. The difference between 40 and 10 is big. It's 40. Yeah. 40. Oh, 40%. Eh? So how did you get 40? 20 divided by the number of shares in UPIA. UPIA is 1,000 divided by par value, which is 20 times 100 gives you 40%. 40% makes UPIA to be moved to the group associates. Correct. We shall overcome. So the main reason why I'm doing that question is this one is one of them. When the examiner fails to give you the percentage, don't call supervisor. Hello, excuse me. There's a problem. Supervisors, they don't even know these things, by the way. They are second year, high school graduates. The CASNEB cannot allow anybody with CPA knowledge to supervise an exam. That person can steal the exam for people. So, no, now me, I'm a CPA person, so it's impossible. Yeah. To be a supervisor? Yes, you apply, but you can't get. You already have CPA knowledge, so you can't get. You must be someone in campus and you are not doing any business related. You are doing forestry, fishing and cooking and beverage. But if you are accounting related, that one. So they don't know. So don't go supervisor that, excuse me. We don't have percentages. There's an error. In fact, if you tell them, they will raise it very fast with the chief supervisor that the question has a problem. Chief supervisor is also primary head teacher. They call CASNEB immediately. That check question 2. There's a problem. So he comes and says, there's a problem in question 2, and people are wondering. They are looking at you. Oh, what is the problem? It has no percentage. There is no problem. So where they don't give us the percentage, you had used the wrong link. Sorry, we have just started. This is our very first working, and we are doing the recap. I'm telling you where you are not given the percentages of shareholdings. The percentage of shareholdings, then you take the number of shares acquired in that company as a fraction of the total shares in that company being acquired. So when you check additional information number 1, you can see in Safari, the parent acquired how many shares? 80. When you check equity in the balance sheet, the total shares. So total shares in this case, you take, this is in monetary value, you divide by par value to get the number of shares, we express as a percentage. Then the same for this, they acquired 20, then take this in monetary, divide by the par value, you get 40%. I hope that now can bring you people up to speed. Then now, from there, you know, there are 4 workings. There are 4 workings which will tie us. Number 1, on the side of assets, we will have to know goodwill. Sure. For the subsidiary, you need to determine goodwill. For associate, you determine the current investment. How much investment do we have? Then under equity down there, we need to know the retained earnings and we need to know the capital of NCI. Those 4. So those 4 workings, they will follow us. Whatever we do, they will just be there with us. So either we start the presentation without them, then we do, okay, let's agree by the way. Can we do others, then we leave the spaces, then we do the workings we fill, or we do those 4 workings, then we do the balance sheet once. Which one is better? We do the workings, then we do the presentation. There we go. So I will wish to start with goodwill. Oh, at least we operate with baada ya dhiki ni faraja. So ndio si ati faraja then sasa unaenda kuhangaika na watu. So I want us to get goodwill. So our printer, we have started from there. So let's start with goodwill. Goodwill, we want to compute goodwill. So how do we calculate goodwill? Just the formula. What is the formula for getting goodwill? Purchase consideration minus what? The share of net assets acquired. So right there, Dorothy, what is the issue? So right there, yes, NCI has been stated, so you will add. Dorothy, from ordinary share capital in the balance sheet, or you are answering somebody? Yeah, you answering. Oh, you are the one being answered. Kindly explain where we. So, she has explained. Just a minute. Sorry for that. Someone intercepted. So Dorothy, you're okay now. That's good. So goodwill, shillings are in thousands. Please don't be very serious. Relax. Don't take it as if, like first time when someone is boarding a plane. You know, when you board a plane for the first time, you don't even laugh. The entire journey, you just think about you're going to die. So it is not a matter of death. It is true. First time in the place, the whole journey you're just thinking of what if. Okay. So it's not a matter of death. Let's just be, it's friendly. So guide me. I'll go with your guidance. We start with what? Purchase consideration. Purchase consideration. Were we given? Have you seen it somewhere? Where? In note 1. In note 1, there is cost of investment. So in Safari, they invested how much? 5,000. Then did they provide the fair value of NCI? Yes, it was a certain note. Note number 5. The fair value of NCI in Safari is how much? 15. You top up. So add fair value of NCI 15. Therefore, total purchase consideration, how much? 60? 65. Then we less what? Net assets. So net assets, some students, they write net assets, then they don't know what next. So what are the net assets? Ordinary share capital, share premium. I want you to master the 4. Ordinary share capital, share premium, retained earnings, revaluation. But retained earnings and revaluation, I said we check on the date of acquisition. So ordinary share capital, I can see learning curve somewhere. Ordinary share capital, how much? 2,000, Safari. Share premium. Share premium is how much? 1,000. You see that thing they're writing down there, revenue reserve. Revenue reserve is the other name in accounting, is the other name of retained earnings. That is what you need to know. You know, retained earnings is the profit which remains. So it is the revenue reserve behind. So retained earnings, but retained earnings we take on the date of acquisition. In note number 1, check note 1. How much was there on the date of acquisition? On the date we acquired the company, 24. Then there was fair value uplift, which is revaluation. Revaluation was how much? Note number? Note number 2. Please check note 2. Note 2, revaluation was 400. Therefore, the total net assets here comes to how much? 58. 5,800. You less. So the difference between 65 and 58 will give us what? Gives us what? Goodwill. So goodwill of how much? 700. Did they talk of impairment somewhere? No, they did not. So we tell them less impairment. Impairment, if what? If any. If there is impairment, you subtract impairment here, which was lacking. Therefore, what you get is called net goodwill to CSFP. CSFP stands for? Period. How much? 700. So that is what we'll take to the balance sheet. And in most questions, you know, it is also part of required. So Who has a question on computation of goodwill? Who has a question as to the computation of goodwill? Any question on goodwill? Okay. Online, any question on goodwill computation?
Hey, this is for wondering what you are writing. They are people are writing and we are silent.
She's writing R1 and B, yes, which is okay. There seems to be no question. I want us to do working 2 for NCI. No. Before we do NCI, investment in associates. You know, associate will go to the balance sheet. And on current assets, you must check how much, you know, associate is like a small company where you have investment. So you need to know how much is that investment. So write for me there as working 2, investment in associates. So that is our working 2. Investment in associates. Investment in associates. And this one, there's a question we did, it was part of required. So sometimes it is required. You need to know how to go about it. So investment in associates. Investment in associates. Investment in associates. You say initial investment, initial. Anybody joining late, the main aim of me picking this question is here, this working 1. How to come up with percentages where percentage have not been given in the question. So I'll share the video, make sure you concentrate much here. The video you post, you come back, you post, so you can play with the video. So that is later. Meanwhile, let's continue. So what was the initial investment in associates? How much did parent initially invest? That's not 1.
1600.
They invested 1600, true. Then any profit which that company will get after acquisition, parent will take 40%. Then you top up. If it's a loss, you reduce. So you add post-acquisition profits. Post-acquisition profits. Post-acquisition profit. And who is the associate, by the way? UPIA. UPIA is the one which is an associate. So post-acquisition profits. How do you get post? You know, those who want to post make some people to feel bad. Eh? Post-acquisition is the profit in the balance sheet. You know, balance sheet is today when you are closing, minus the profit when that company was acquired. So when we acquired them, this was their profit. Now this is the profit, that difference. You take your percentage to increase your investment. So you take 40%. 40%. What is the closing retained earnings? Closing retained earnings, which is the revenue reserve. Revenue reserve is the retained earnings for UPIA. How much are you saying? Are you saying 24?
Yes.
Yes. 24 is the closing retained earnings, which they are calling revenue reserve. How much was the retained earnings when we acquired UPIA? Check additional information number 1. It was 1600. Meaning this company made this 800.
Yeah.
They made 800 after acquisition. After acquisition, so take 24 minus 16 by 40. You get 320. Increase your investment. Whatever profit they get after you acquire them, take your percentage, then increase the investment. However, there is something. Check this note number 4. Read note number 4 on your own Kindle. Aye. In note 4, who sold to who? UPIA sold to? See, UPIA is the associate. And they were expecting some profit. That profit has not been done what? Realized. Subtract. So it's affecting associate. I hope you can be able to see direct because it's UPIA who sold that. So less UPI. And realized profit on inventory. But parent will not be responsible for everything. They'll be in charge of what percentage? 40. 40%. So let's calculate the unrealized profit at a selling price of this, which gave UPIA a profit of 40% on cost. Is that 40% on cost markup or margin? That 40% is markup because it is on cost. So convert it to margin. So to margin it will be 40 over 140 times the goods which remain unsold. What percentage remained unsold? A half. Sure. A half of the 200 and what? 80. That is the unrealized profit. 40% on cost. 40% is 40 over 100. To margin, 40 over 140. Yes, that is the margin now. You get the entire thing? 16. So parent will be responsible for 16. There is nothing. If there was impairment in UPIA, I subtract. But there is nothing. So the investment which will go to the balance sheet is this one here. Can you adjust and tell me how much? 1904. 1904. Very good. Working 3. We are dealing with only 2 workings, then we do presentation. Working 3. I want us to determine the capital of noisemakers. NCI, you need to determine their capital. Otherwise, they will keep on making a lot of noise. So NCI's equity. So how do we get NCI's equity? You check their fair value on the date they were acquired. Then you give them the post-acquisition profits. Then you check UPI, depreciation, impairment, full stop. Those 3. How much was the fair value? Fair value on acquisition. Which was not number? Last. On the date the company was acquired, the fair value of NCI was 15. The profit that company, which company here we are talking about? Safari. Any profit Safari will make after acquisition, minority will be given what percentage? 20. So the parent is controlling 80% in Safari. So minority will be entitled to 20%. So you earn post-acquisition profits. So post-acquisition profits will be 20% into brackets. The profit the subsidiary made after acquisition, simple. Just check the balance sheet, the retained earnings there minus the time they were acquired in note 1. What minus what? In the balance sheet, what is the revenue reserve for Safari? Which you can see. 38. True. when we acquired them in note 1, how much was their retained earnings? Their retained earnings was 24, so you subtract. So you subtract. What do you subtract? 20, 24. So 38 minus 24 by 20. To 80. You add. If there was unrealized profits, you subtract, but there is nowhere Safari sold. Sure. There is no depreciation, there is no impairment. Those three. Once you add the post-acquisition, and post is simple, closing minus by then. Check impairment, check UPI, check depreciation. Adjust, then you share. Therefore, the adjusted equity is 1780. 1780. That is what will go to the balance sheet. The only working remaining is for retained earnings. Then we can now do the question. So how we have retained earnings? Retained earnings. And all which we are doing, remember there is no mark. Those are workings. So what is the retained earnings carried down for Mwanzo? So retained earnings carried down Mwanzo. Let's start with Mwanzo. How much is the retained earnings for Mwanzo, which you can see in the balance sheet? When we talk of carried down, we are talking of the balance sheet. You can be able to see 9,000. So 9,000. Then for the subsidiaries, parent will take post-acquisition, the profit they made after they were acquired. The parent will take their percentage. So you add post-acquisition profits. Post-acquisition profits in Safari. But Safari, parent will be taking what percentage? 80. So you know how to get post? Sure. Post is the closing minus by then. Even I can see it here. 38 minus 24. Minority went to the 20, so parent will take 80. How much do you get? 11? 1120. Then in Upia parent will take 40%. 40%, I can still see it here, this one. 24 minus 16. So this is 24 minus 16. You get 320.
Yeah.
320. Then now you need to subtract the obvious. Which are the obvious I'm talking about? Yes. You remember number one, there was management fees they are charged. You need to less it here. So less, because they were charging to who? It's one of them. Now, so subtract is an expense here. So less management fees. It was how much? 100. Please check it out. Because we don't have P&L. You know, if P&L was there, I would have charged it to the P&L and administrative. I would have combined it with the administrative, but we don't have P&L, so it means it must affect the retained earnings. Is that okay? Then another obvious is which one? When I talk of the obvious, the three elements, always check them keenly. Impairment, UPI, and depreciation. So which one was present in this case? There is one which was present. Only one. Which one? UPI. So less UPI, but UPI was in Upia. Sure. So in Upia, this one here. Parents. Now, do you want me to do that working again? You can do it. 16. We are done. Get for me the total consolidated profits. You get? 10?
3, 2, 4.
10, 3, 2, 4. Full stop. Who has a question as to the workings? Because we want to do presentation. I want us to do presentation. Who has a question on that? If there is no question, then let's do the presentation. You say Mwanzo Group. So say there Mwanzo Group, consolidated statement of financial position as at that time. As at when? Non-current assets. Now, just concentrate on their format, but now we consolidate. I want you. How are we going to consolidate for this thing? We are going to add what, and what? Yes, Mwanzo and Safari only. Yes, you don't add the items of Upia. You add the items of Upia, you will come for another fellowship next semester. You will get 0. So we don't consolidate for associates and joint ventures. Anything 50% sharp and below, you ignore. You don't have control. Where you don't have control, you don't have a say. So Upia, you can even take a red pen. It is meant to bring us confusion. So let's kick off. Those are small things for Timalaya. Timalaya needs serious things. That is something small. So we start. PP, property, plant, and equipment. So you will take 7960 plus 46. There was fair value uplift somewhere in note number 2. How much was the fair value uplift? 400. And it was land which was not being depreciated. If there was depreciation, you add the uplift, then you subtract the depreciation. Sure. So now, if someone will ask you, I was going through your book, I realized you were not adding these items of Upia. Kindly explain. What will you tell that person with a lot of courage, without saying that, you see, Anybody starting with you as a sentence with the word you see, that is a lie. Yes, you don't say everything, you say with full stops. I did not add because it is an associate, full stop. Then the next question is, so what about associate? So, as I say, you have no control over UPIA. UPIA is just an investment. Correct. Then if he cannot understand from there, then that person now. Yes, wait for another semester. We don't, because we don't have control. Control starts at 51. Even if it is 50, you ignore. Please. 50 sharp, you don't have control. Or if you have 50, you are controlling. You know, even they say, please don't offend me of this because this is social and it might be touching maybe one of us or some of us, but I don't know your social status. If this is a husband, and in Africa, and Africa is our business, the husband can have even 10 wives. So here even he has tried. He has wife 1 and wife 2. And he loves them, all of them. When they are in an event where wife 1 is not there, the husband is with wife 2 only. Then wife 2 wants to introduce the husband. How does she introduce the husband? You don't say, here is meet my husband. It's not allowed. Yes, you don't say meet my husband. No. You say meet our husband. Because you don't have control. You have joint control. Yes. That is how it is. Oh, are you normally introduced? Mario hour. So please, you get 50%, 49 below, ignore them. It is just you just bring your investment. The way Afdi has put it, it is just an investment. It is not a subsidiary. So you don't consolidate for it. Thank you. So add. 12, 9, 60. Good. We proceed. Then we have patterns. We have patterns. Patterns is 500. There is nothing there. Plus 840. 500 plus 840. 1340. Investment in Safari, I told you, you replace it with what? Goodwill. Investment in the subsidiary, you adjust, then you say, you talk of goodwill. So bring goodwill instead. Goodwill. How much was goodwill? 700, yes. So bring 700. Investment in UPIA, you bring that investment. So you tell us investment in UPIA, but the one you have adjusted. So investment in UPIA. How much did we invest in UPIA? We got 1304. Then we have others. So other investments, you add 300 plus 400. That is how much? 700. Correct. So add. So imagine number one difficult thing in that question was to get the percentages. That is one. Two, you knowing that UPIA is out. You know, any student who knows UPIA is out, even if the question is hard to that person, there are things here which you can get. Even without thinking, patterns that person must get. Other investment that person must get. Just knowing that you exclude UPIA. So how much do you get? 17? 604. Current assets. Current assets. Current assets, we have inventories. Inventories, we add 1140 plus 800. What do we normally subtract? UPI, but we are not going to subtract. Because the UPI here was UPI between associates, it was touching associates. Anything touching associates should not be eliminated. So that is a note you should take somewhere as part of NP. Those people who created NP. Because you will be revising, you ask yourself, this teacher must be. Man, sometimes you subtract UPI, sometimes they don't subtract. If it is touching associate or joint venture, you don't eliminate. So there is no UPI to be eliminated. How much is that? 1940. Proceed. Receivables. Receivables. Add 840 plus 760. There's a note I never mastered well. Yes, there's a note I never mastered. I want to check it. Note 3. Check note 3. Let's check note 3, all of us. Note 3. On 1st of September 2017, Mwanzo processed an invoice for 100 in respect of an agreed allocation of management fee to Safari. So when you process an invoice, most of us here, I know we are accountants. When you process an invoice, what happens? It goes to the customer's account and also the sales account. Sales affect the profit. We have subtracted it from retained earnings. Also, you need to subtract it from receivables. Because when you process an invoice, you expect to be paid. But you're being paid by who? So one of your own. So even furthermore, they are saying, Safari had not accounted for this transaction. So parent had invoiced the subsidiary, but subsidiary had not recorded that invoice. So it means don't go and subtract from payables. If they are recorded, then it means they are acknowledged that they are supposed to do what? To pay. But in this case, they have not acknowledged the invoice. So you just subtract from receivable so that parents should not expect to receive that amount because the other side it has not been recorded. Let's continue. Prior to this, the current account between the two companies had been agreed at Safari owing 142, included in receivable and payable. So that one is touching all of them. So the 140 will be subtracted here and payables because that one is touching both. But for the invoice, you will not subtract from payables because the other side, are you understanding? Yes, so remove that invoice. Also remove that intergroup balance, which was in agreement, 1360. Wow. Bank. Bank, you add nothing plus 300. What was I supposed to add if it was there, though missing in action? Cash in what? Cash in transit. If it was there, you top it up. We are bored. We need something new. You see, like when WhatsApp status came, people were excited. Nowadays, do people even read those things? It's just for expressing feelings. Eh? God is watching. Can we get something new? What do you think can be brought new to excite us? Bring something like you can leave your phone at home, but you can receive it wherever you are. Can that one work? You leave your phone at home, switched off. You can receive your phone even if it is switched off. But the other person cannot see it ringing. We need something new. We have something new which motivates people. Which one? Signal is boring. Telegram became bored from the start. What is new? Maybe I don't know. What is new? What is new? Zoom. Ramla, inventory should be UPI be deducted. Yes, you only deduct if it was between parent and subsidiary. Quintal, we are still dealing with WhatsApp GB. GB, there is nothing. GB, WhatsApp GB, there is nothing. There's nothing new there. What is new in GB? We have known all the secrets there. That there are some messages which are hidden. So we tap up there to reach there. So there's nothing we don't know about GB. So we need new things. You can invent when people are still sleeping, you come up with something. Well, give me this answer, 300. So after I've said, you only subtract UPI if it is touching on parent and subsidiary. And I recommend when you are asking a question, express this to the entire class. You have DM'd me. I'm the only person seeing your question. So somebody else can ask the same question, which is a complete waste of time. So you check the entire. So you only subtract UPI if it is between parent and subsidiary. Is when you eliminate it, otherwise you don't. How much is the total? 21? 204. So that is total assets. Equity and liabilities. Like Kenya, I normally see how people are excited. People are excited with the expressway. Do you know Uganda had the expressway 5 years ago before Kenya? I don't know that you're aware. This Uganda here. They had, yes. They had the expressway. But here in Kenya, it is taken seriously. Yeah? Even you can call people to watch. They had before us. And they don't even say. By the way, that one reminds me of something. Why should Casted not put this exam of yours as that of Uganda? You know how Uganda does the exam? Oh, Uganda also they have CPA. Their own. The way we have CPA Kenya, Uganda also they do have CPAU. Yes. Now, this paper, financial reporting, that one I know. What they do, it is normally done in 5 hours. Yes. So 1 hour, the paper is given. The invigilators are very thorough. You don't write anything. In fact, you are not allowed to have pens. You just go through the question. You familiarize yourself with the questions for 1 hour. Just familiarizing yourself with the questions. They want, if you pass, you pass. If you fail, you fail. So, because some people fail because of tension. So 1 hour to familiarize. Then you are given 1 hour to go outside the field, to relax off. No, you can't discuss. Everybody has almost, the ratio of invigilator to people doing the exam is almost 1:1. So invigilator is there with you for 1 hour. You relax, then you come back now for 3 hours to sit for the paper. So I know what you are thinking about. So that's how they do their paper. If they try that one here, you can. So if you fail because you don't know. You know, some people fail because of tension. So you have, when you go to the field, you can see how your friend is trembling. That one gives you courage. Gives you courage to come back. So ordinary share capital. Ordinary share capital. I told you we take which one? Parent only. Parent only. So parent only is how much? 4,000. Then share premium. Share premium. Share premium also parent only. 2,000. Those are free ticks, unless you don't want them. Revenue reserve is the retained earnings. Retained earnings. That one we did a working. Can you check your workings in relation to retained earnings? 10, 3, 2, 4. Then equity of minority. So you say NCI. NCI, we also did a working. We got 1780. Can you earn? Okay. 18. 104. Then we go to non-current liabilities. I'm really struggling to so that you fall in love with group accounting. Are you falling in love with this topic? You will have to by force, because it will not give us space. You know, there are people who believes in prayer, including me. But here, even there's a day we try to pray when we were in section 6, that God is ahead, by the way, this advanced group accounting ahead. Can it just not come? It will come. So just tell God, can you help me to master 1, 2, 3? So don't pray that it doesn't come, it will be there. So non-current liabilities. Non-current liabilities. We have deferred tax. What plus what? 400 plus 0. That is 400. Then we have nothing. Current liabilities. Current liabilities, we have payables. Payables is 15 plus 9 plus that amount which was between them. 140. It was 140. What they were telling each other, oh, remove it out. You don't want those internal stories. How much do you get? 2260. Give us current tax. So C tax. Current tax is 280 plus what? Plus 0. That is 280. Bank overdraft, bank OD is 160. 160 plus? We check that thing well so that we don't. It is that 900 is no plus 0. Yeah, it's plus 0, giving us 160. Total equity. Total equity and liabilities. Are we in order? In order means 21 204. How many marks? 14. Worst case scenario, in a 14 is 1, 2, 3, 4, 5. Worst case scenario, they want 14 ticks. That is worst. Otherwise, it should just be 7. 7 ticks you sell through. Which ones can you get without struggling? Let's start with current liabilities. In the current liabilities, which one will you get without struggling? Without bank overdraft and current cards. Sure. Without struggle, we are checking without struggling. And this one. Sure. When we go to this side, under equity, we get ordinary share capital and share premium. Current assets, inventories, and bank. Receivable, you can forget this 100 was not usual. Up here, this one you will get evaluation, you cannot fail to add. Especially when you are coming from Alliance, you cannot fail to get this. Others. So even without much pressure, you need to get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So, but from the experience I have, people don't like group. So it will end up, they will try to fix it 14 times 1, but it will fail. They will have to come back to 7. You know, people must pass. I hope you are aware. Not everybody will fail. So the CASNEB also moderates that at least 60% of students sitting for a paper must pass. They do that. So they will just come back to 7 times 2. You will pass. But now, when you say, oh,
So unless there are these workings, which is direct to the consolidated statement.
you think me when I was doing these things, I did workings.
Yeah.
I never did workings, and I passed.
If they haven't asked.
And they will not, okay, maybe if they ask to prepare goodwill. You see, goodwill are things which will waste your time, and you might end up not getting. So why are you struggling when people are not struggling? Struggle when, you know, it is when it is asked goodwill, everybody is there. And every entry which results to goodwill will be marked. But if it is not required, even if you got everything correct except one, it messes up everything. So my advice, if they are not asked, these things, goodwill, NCI, retained earnings, thou shalt not waste your time. And if you want to know you're wasting time, can you just leave them blank? You do these other ones. Then you say that once I'm done with other questions, I will come back. You even realize those other questions you are time burned. So it means by doing them, you are just wasting time. I know some people will not listen to that. So that is it. Stretch out, stretch in. I check what next. Yeah? Mary, are you tired? Who? What about me? What time do you think I was in class? Huh? Are you sure? Are you sure? No, I want to show her. No, I'm not using that. I just want to show her how things are very dangerous in this world. Check this text. Yes. I was in class at exactly 6 a.m. So I was here by 5:45. That's the man. 4. Yes. May I repeat working 1? John, I've deleted it, but I've recorded, and I want to send that recording. And that's why I want to end this class early so that I get time to send before my next class. After the class, up to 8. So, yes. Yes, yeah, actually. So before you check out, I want to see which question is best for us. Because there is a form of question, P&L, and I'm really suspecting this semester they might bring consolidated profit account. And when they bring that, students normally fail group. because of something very small. When a subsidiary, and listen to this, just assuming, and I want to check such kind of a question, assuming that the financial year started on 1st January and ends on 31st December. Then subsidiary was acquired on 1st June. Subsidiary acquired on 1st June. What do you think happens? The profit account will be, so assuming parent is H and subsidiary is S. So S, you will not, for income profit account, the revenue and expenses, you will not add them in full. For S, you will take for how many months? How many months are this? 6. 7 months. From 1st June to December, 7 months. So S, you will apportion 7/12, 7/12. So mostly, but balance sheet, you don't apportion. You cannot say asset, motor vehicle for 7 months. Assets, balance sheet, you take in full, regardless of the date when the subsidiary was acquired. Please take that note keenly. Balance sheet, you don't apportion, regardless of the date of acquisition. But profit account, if the subsidiary was acquired within the financial year under consideration, the one you are dealing with, it was acquired within, then income and expenses, you have to apportion for the post-acquisition period. Are we together? Post-acquisition from here to here, but balance sheet, you don't apportion. So that's the kind of question I want. So what happens, students, normally, when I hear they have brought P&L only, I'm always very cautious until I see how the question is. Because there are some people, they do it very nicely. The revenue, cost of sales, distribution, admin, but they end up adding in full. Imagine what will happen. Then after exam, you tell your friend, today group was at least. Then the friend responds, yeah, actually it was good, except if someone did not see the 7 months. What will you do? Yeah, it was good, except the 7 months. You can feel like telling him that I have not written my name. Can I do something? So don't log out, give me like, because I want to give you takeaway for that. Give me like 1 minute, I check a very good question on that. So that you can check, we'll do in our next class. I will end the group accounting at that stage. So you can stretch in out as I check. I want something very nice for you. You have been in class since 8. You have been in class since 6 a.m. And I've not taken back, and I will not die now. The year is ending when? 30th April 2016. 1st May 2015. Okay, that is on this Germany 50%. Oh yes, I know that question. There's a question. Let me see your paper. Jemima, you can check on me after this class so that we don't. I got it. September 2015, write for me that question. September 2015. September 2015. September 2015. September 2015. Question 1. September 2015. Question 1. Pilot paper. Pilot paper. Page 95, thereabouts. Page 95. We do it all, you can go and attempt, then we do it in the next class. Yeah, you can go and attempt, then we do in our respective classes. That will be my last question for book now. Time is moving. There are topics remaining. Eh? Can I tell you the topics remaining? Let me tell you. Yeah? And publisher. we are remaining with published. We are having partnership, cash flow, branch, and ratios. Actually, so group is here. From time memorial, this one has never been compulsory. This one has not been compulsory, but it has never missed from 2007. Published. Except last sitting, we don't know what happened. They missed it and brought something somehow published, but in form of cash flow. So it means, let me number them, 1, 2, 3, 4, 5, 6. It is either number 2 or number 4. That one is pure bet. 2 or 4. So that one take to the bank. This one, a must. Partnership, also we don't know what happened. Partnership has never missed since 2012. If you check your paper, you realize partnership has been there. And partnership, in the event they are not examining partnership, they examine branch. Apparently partnership was not there and branch was also missing in action. That paper was very funny. So this one is 99.9% chance. They missed it because we complained. The other semester before that semester, they brought something which had been scrapped off the syllabus. The solution, we no longer teach the solution of partnership. So we complained, we say the person is what incompetent, then they felt bad. Then now they removed it. After we have told students it is coming. So this one, then this one is what made this unit to change the name. This unit has been FR. It changed to FRA. So they ace the analysis, which is the ratios. Unless they do what they can do, that one there may or may not. This one comes once in a blue moon. I don't know if the last time it comes after 4 years. I don't know when last it was examined. So this is the hard piece. And I can tell you for a fact, here, the one which is feared by students in all this, the one which is feared by students most is this one. Because I have experience how students behave. Students hate branch with all their hearts. Then number 2, which tends to be complex but not that much, is this one here. Then followed by published. Then group and partnership are of the same level. So just gauge yourself. If you get these ones properly, you will not fail FR. And now someone now just want to read this one, so forgetting about all these other ones. Even those other ones they will examine, including theory, which I want to give you the handout. It's ready. I don't know why I keep on forgetting. I'll share it. So thank you. Do have a nice weekend. Continue reading, because from today's class I can see people are really participating, which is quite encouraging for group. So next we are meeting. We are doing that question. I stop there immediately. Then I think I will pick up on cash flow. Then I look at partnership. The time is really moving fast. Very. We have to be very cautious. Huh? Yes, otherwise we get ourselves in. But I'll finish. You cannot go to exam without me finishing. That is impossible. There are many, but we'll finish. The one which is long here, none of them is long. So thank you so much. Do have a nice weekend.